Hello again, everybody. Doing here from DRFX Spark Swing Trading. Canadian Swiss franc once again. Recapping this overall scenario on this pair. As you can see from the daily chart, this pair has been in a very strong downtrend since 2010. So drawing the trend line across the highs of resistance, we get the overall downtrend that has defined the direction of this pair. Now, since the large reaction by the market to the decision of the Swiss National Bank to abandon the exchange rate peg with the euro, which led to this sharp reaction, sharp downtrend in favor of the Swiss franc last year. This pair has been basically moving within a sideways pattern that has led to the formation of this range consolidation setup. So this has been the situation for this pair over the last year, and we're now actually finally starting to see the market indicate an attempt to resume the downtrend. This is taking the form of the breakout that we have been analyzing over the last couple of days, but unfortunately it has come with a weak setup at the boundary. So despite the strength of this bear candle breakout signal, because it has not been associated with or accompanied by a strong setup, we have to ignore it for the time being. The reason for this is that when we're talking about breakouts from major consolidation setups and major trend lines, the setup that leads to the breakout signal has to be strong. And by strong, what I mean is that the candles that have been formed that have led to the breakout signal have to be of the type such as this, which are full-bodied bullish or bearish candles, or a combination of both. So just as how we see this strong counter trend line that was formed within the boundary just prior to the breakout, we would have needed to have had a similar setup at this area here. Either a counter trend line such as this, or a small consolidation setup. Now, with regards to breakouts from these consolidations, there are times when the market will break out successfully with weak setups, or sometimes without any setups any at all, and will continue in the direction of the breakout with just the candle to start the breakout. So this is another setup that we could have actually had in the form of a small consolidation setup. So in the absence of something like this or this, breakouts such as this have a very low probability of actually taking place. They do sometimes lead to successful breakouts and successful movements, but in the absence of a strong setup, there is an increased chance of a reversal to take us back inside of the consolidation. So with breakouts that have setups that are strong, the probability of a successful breakout is at least 90%. But with breakouts such as this without strong setups, the probability of a successful breakout is reduced to approximately 60%, with a 40% chance of a reversal taking place. What needs to be done for this area to redeem itself, so to speak, is for us to have a brief period of sideways movement that produces either a counter trend line setup or a consolidation setup. So one of these needs to appear right here, followed by another breakout signal. That will be the only justification to continue to consider the bearish scenario. In the absence of that, then we're gonna have to look for a setup such as a consolidation, a double bottom, or a strong ABC setup that starts a reversal that takes us back inside of the consolidation. So right now the market has I would say a 60% chance of a reversal in the absence of a strong setup. So a nice attractive strong signal, but a lower probability of actually leading to a successful breakout. What this means is that we need the market to provide us with strong setup in order to increase the odds of a successful movement. So, and these are going to form, the form that this is going to take is either in the form of a counter trend line or a consolidation setup. So those are the two possibilities in terms of what we could actually see take place. And in terms of the possibility, that 40% chance of reversal, this is actually going to be take the form of a possible ABC reversal signal, double bottom, or consolidation setup as well. So consolidation setup is going to be possible, or holds the key in terms of the possible setups for either a rally or a continued breakout bearish. So those are the three. So those are the scenarios that we face right now with respect to this pair. So based on what we're seeing right now, the market is basically moving sideways with these weak candles. So it's not really giving us an indication as to what is actually going to be taking place. So it's definitely too early to tell, and we're going to have to basically wait until the market provides us with a clearer setup as to what it's going to do with stronger candles. So again, a breakout taking place from this consolidation, and we could actually see the continuation or the resumption of this major downtrend, but we're going to need a couple more things for the market to provide us with before we actually continue to monitor or to consider this trend, the continuation of this downtrend with this breakout. The beauty of these types of situations is that we know in advance that, one, we can avoid the possibility of a reversal and a loss, and we can calmly and objectively analyze the possibilities in both directions. So that's the beauty of swing trading, is that it allows us time to calmly assess the possibilities of what can take place without the pressure of trying to make 20 pips, 30 pips, 40 pips within a short trading day. So taking a broader and a more relaxed and a more objective view of the currency market is definitely one of the benefits of swing trading and for consistent profitability. So with these scenarios, you can appreciate the need to analyze the market from various perspectives and to know exactly what are the possibilities that can provide itself in terms of a trading opportunity. So instead of blindly rushing into a trade just because the market has broken a major barrier, we have to take into consideration all of the technical factors that will actually lead to a successful breakout or a false breakout reversal. So this is what we are able to do in combination with the technical factors in the trading manual. And once you have that knowledge in that trading manual and you see it over and over again in the currency market and on currency pairs every week, you can be a lot more confident and a lot more patient to wait until the market provides us with the right setup and the right set of conditions to take advantage of the opportunities that present themselves. So this is another situation in which we have to exercise a lot of patience and wait until the right move and the right setup and the right signal appear for us.